Hi and Assalamualaikum to Prof. Dr. Rasida binti Muhammad Said. This is our group presentation for Managerial Finance. Before that, let me introduce our group members. We are all 4 members in this group, myself, Wan Nur Izan Nabila binti Wan Ismail, Dayana binti Mat Ali, Nur Hafiza binti Muhammad Sapidi, and Elsa Fadila. Firstly, our group has decided to choose Aeon Co Sdn Bhd company to make our financial analysis. To start the presentation, let me tell a little bit about the background of Aeon Co Sdn Bhd. Aeon Co Sdn Bhd was first introduced as Jaya Just Go Stores Sdn Bhd. It was set up in Malaysia in year 1984. In response to the Malaysian Prime Minister Datuk Sri Dr. Mahathir Mohamad initiative to modernize the retail industry in Malaysia using world's most advanced management expertise. Dr. Mahathir visited Tokyo and met the Jasco Co Ltd President Mr. Takuya Okada to discuss the proposition of bringing the Jasco to set up store in Malaysia. Following that, a joint venture company was established in September 1984 with 3 parties involved, which is Jasco Co Ltd, Panembah, and Cold Storage. Jaya Jasco's aim was to grow with the people of Malaysia through the transfer of expertise from Japan and human resource development. After a few years later, Jaya Jasco was exchanged and become an Aeon Co Sdn Bhd. The Aeon name was well established among Malaysians as well as foreigners. Aeon also leading chain of general merchandise store GMS and supermarkets. Aeon stores mostly located in urban residential area for middle income group. Aeon Group of companies consists of Aeon Co Ltd and about 300 consolidated subsidiaries and affiliated companies. Aeon also active in specialty store operations, shopping center development and operation, credit card business and services. Aeon activity are guided by its unchanging customer first philosophy and its aim to surpass expectation by combining excellent products with unique personal services that enhance the shopping experience to make customers satisfied. To talk about customer first principles, the customer first 3 keywords are peace, people, and community. Aeon is a person-to-person business. Aeon is a person-to-person business and its existence is deeply intertwined with the people of the region and societies in which they serve. Aeon's strategy is to establish a solid competitive position and achieve continuous growth. First, by accelerating shopping center development, they channeling their resources. Second is aggressive pursuit of GMS store by combine supermarket and department store under one roof. Aeon goals is to operate as an international scale retailing group recognized internationally.
For analysis part, data. From the calculation, we got the average return, standard deviation, correlation coefficient, and beta for Aeon Co Malaysia Berhad. For the average return, we got that the Aeon has minus 0.1. than the market. This is an advantage to the buyer because they are able to obtain goods, services, or investments at price that is lower than the going rate. For standard deviations, Aeon has 0.04189, while the market has 0.011373. A lower standard deviation isn't necessarily preferable. It all depends on the investment one is making and one's willingness to assume the risk. When dealing with the amount of deviation in their portfolios, investors should consider their personal tolerance for volatility and their overall investment objectives. More aggressive investors may be comfortable with an investment strategy that opts for vehicles with higher than average volatility, while more conservative investors may not. And next, for correlation coefficient, it's measuring of how closely the variables move in relation to one another. And for ions and market, it has 0.142446. For beta coefficient calculations, ions got 0.524649. It means ion is less reactive when the market reacts and is considered less risky investments, also provides lower return. Beta calculation for the last 500 days for ion stocks are 0.63, which indicates that beta we calculated is not very far off from the published beta.
The capital asset pricing model, or shortly known as CAPM, is a model that describes the relationship between expected return and risk of investing in a security. It shows that the expected return on a security is equal to the risk-free return plus a risk premium, which is based on the beta of that security. CAPM is calculated according to the following formula, where RS is equal to the expected return on a security, RRF is the risk-free rate, beta I is beta of the security, RM is the expected return on market. For Aeon Co Berhad, below are the figures determined from the stock's historical data for the last 3 years, where RRF is 4.13. We got it from bondinfo.bnm.gov.my. Beta for Aeon stock is 0.524649. And RM, the expected return on market, is 0%. So, in calculating the required return for Aeon Co Berhad using CAPM, the determined values need to be plugged in into the equation as follows, which resulted in RS for Aeon Co Berhad is 1.98%. For Aeon Co Sdn Bhd, we calculated the growth rate of the stocks by using the retention growth model. Most firms pay out some of their net income as dividends and reinvest or retain the rest. The more they retain, the higher the earned rate of return on those retained earnings, the larger their growth rate. The payout ratio is the percent of net income that the firm pays out in dividends, and the retention ratio is the complement of the payout ratio. From the data we retrieved from klse.investor.com, we can see that the payout ratio is 65.15%. So, the retention ratio will be 1 minus the payout ratio, which equals to 0.35, which in turn equals to 35%. The data also indicated Aeon Co return on equity, ROE, has been reported as at 4.29%. When other things held constant, the earnings growth rate, G, depends on the amount of income the firm retains and the rate of return it earns on those retained earnings. So using the retention growth equation, The growth rate for Aeon Co can be calculated as follows. G is equals to ROE multiply the retention ratio, which will give the results of 1.50%.
Price of common stock. There are two prices that are important for any investor to know: the current price or the actual price of common stock that the investor owns or plans to own, and the future selling price. But usually, investors will review the past pricing from data history and use it to influence their future investment decisions. To maximize their wealth, an investor must purchase the stock at the right price. Predicting stock prices can be more accurate using some financial ratios. At the same time, companies also can use the financial ratios to see whether they have maximized the wealth of the shareholders, or if not, what actions can be taken for them to achieve the result. As we can see, is the historical data of Aeon that we retrieve from investing.com. To calculate the stock price, as for Aeon Co, we calculate the price of their common stocks using the price to earnings ratio or PE ratio. We use the data of PE ratio given to determine how much the market will pay for a particular stock. The common formula used is as below. Price per earning ratio is equals to stock price per earning per share or EPS. We rearrange the formula to find the stock price. So the new formula is stock price is equals to price per earning ratio multiplied by EPS. From the historical data, as we receive from www.investing.com, the PE ratio is 26.81 and the earning per share is 0.07. So we can calculate the stock price, or calculated stock price is RM 1.876. Actual price. We get the present or actual price from the stock quote in investing.com. As of 23rd November 2018, Aeon's actual stock price is RM 1.81. Analysis from these two data on the stock price, we can see that Aeon is offering an undervalued stocks, which is RM 1.81 as compared to calculated stock price at RM 1.87. Based from this calculation, we believe that the price of Aeon is undervalued. This is mainly because Aeon has been offering a good PE ratio as compared to other company. Aeon should be more favorable than the company with a lower PE ratio. And from this analysis, Aeon can do more to maximize the wealth of the shareholders. What Aeon can do is to maintain their powerful brand name, sell more profitable items, increase their enjoyable consumer products, and attracting more tenants at Aeon Mall.
For the conclusion, beta for Aeon stock is 0.52 and the portfolio of this stock tend to move in the same direction as the market but with a lesser degree. The stock of Aeon Co Berhad is less reactive when the market reacts and is considered less risky investment. However, having low beta means that Aeon Co Berhad stock also provide lower returns. The differences of the beta values can be influenced by factors such as timing period for the reports may be taken differently, like weekly, monthly, or yearly to calculate the same beta. Also, the data underlying the values assigned to each of the variable are different. By using capital asset pricing model, CAPM, and the yield of the 10-year Treasury bond as the RF, which is 4.13%. The required rate of return is calculated as 1.98%. As for growth rate, they calculated the growth rate using the retention growth model. By using this model, the calculated growth rate is 1.50%. And based from our calculation and from the present price, we believe that the price of Aeon is undervalued. This is mainly because Aeon has been offering a good PE ratio as compared to other company. Aeon should be more favorable than the company with a lower PE ratio, and from this analysis, the company can do more to maximize the wealth of the shareholder. And finally, for the overall, Aeon has a great performance for the past 3 years. Analysts even forecasted that Aeon is going to be much more successful for year 2018. That's all from us. Thank you.